All right, hello everybody. It is 6:10, the date, not the time. And futures just opened up here. Let's just get rolling. It's going to be a shorter webinar today. Hopefully I share the screen right this time. Let me double check. All right. So I'm gonna go over some bull and bear scenarios here. I drew out a couple of things here. I didn't want us to start start without some stuff drawn here. So overall here looks like there's just been a decent amount of selling. Not anything. It's actually been pretty aggressive, but the bulls have really been trying to get the price off the floor here. There was a ton of volume today. If you would look at the daily chart here, you can see it's just massive massive volume. You can see the past couple of days here we've had a lot of sell pressure. And I think that most of that is due to raising capital for something like SpaceX, or really just getting out of the market. I think that there's a lot of stuff going on, and it's finally starting to matter. We got inflation prints, new Fed shares, new ways to calculate CPI. We have a whole bunch of different stuff that doesn't really sound very cool. So, anyways, but that's not necessarily a reason. A gut feeling is not necessarily a reason for lots of selling. But what we can do is we can make some assumptions, and the assumptions here are really just we were overdue for a correction, big time here. I mean, we're the S&P is still over 7,000. That's a lot. So the valuations are still pretty pretty stretched, I think you could say. We kind of knew this was coming. I was pointing out things like if you look at like the market breadth chart, we could tell that since it's kind of diving off cliff here. So I mean, it really hasn't gone that far yet. If we do a measure of where we're at, it's really, top to bottom. We've gone 8.5, or about 8.3%. That's not that much. Zooming out in the grand scheme of things, we really have a lot more to go. And this is really just the last low that we had, back when the Iran war mattered. But you can see that this 50-day moving average has really gotten pretty crazy, which is the purple line here. So let's kind of take a look and see what might be happening here. So I think overall here, and we'll just use the Nasdaq as a proxy because the Nasdaq is the weakest. So let's do some fib extensions. What is going on with my mouse today? All right, so of course we'll do both bull and bear scenarios. This one I think is going to be pretty easy because this one, it really does look like it's just one last leg down here. But the only thing that I'm wondering is if we're going to get a small bounce or not yet. Back to kind of where we were consolidating today, and I think there's a good chance of it. Maybe tonight, not sure. But futures did open pretty brutal here. So in the grand scheme of things, really what you want to look for is what type of pattern it is. So right now I can see pretty clearly we've got some ABCs, and now it kind of looks like we're going to see this. But the only question really remains as to how far it's going to go. So normally how you notate this is just WXY, but the only thing that really means is it's just a series of ABCs. So we just drew that and just kind of saw that. So my first initial thought here is going to be that this is really the first leg of a larger correction. I think that again it's overdue. We're still pretty inflated here, but sorry, I don't know what's going on with my charts. Anyways, the floor here that I have for the Nasdaq is about 27,780. For that, I think they're going to want to test this 50-day moving average here. I think it'll definitely survive. I mean, it's still by the dip land, and I think even if we do get what is going on? even if we do get this sort of this trend line touch here, you can realistically, you can probably assume that we'll get some sort of retracement like this, or extended higher, or even higher than that. There's a lot of volume that's traded hands up here. So I'm thinking that the bulls want to get back, the bulls want to get back what they lost. But we still haven't had that much of a correction yet. We had a 10% correction, back a couple months ago, but didn't really have any staying power. Mark just got bought up, and it was another quote unquote historic rally. But how I'm seeing it today is, like, you want to play both sides, play longs and shorts. So right now, what I'm waiting for is I'm waiting to see if we have this sort of, this is your bullish scenario, where you get this sort of breakout of this channel here, and you kind of redraw it, and it becomes more of like a sort of a triangle, I guess you could say, providing the bottom holds here today. It actually might be a little more like this. And this is still sort of like a means to an end. Anytime you see a triangle, it's like either a B wave or a wave 4. But typically you always see a lot of about 5 ABC patterns within a triangle, within some sort of consolidation. But that really is probably the only bullish hope. You could see something like this overnight, and then a continuation. And I actually think this is probably what's going to happen here, where you'll get a lot of bulls on board. It might actually go a little higher, but you get a lot of bulls on board trying to buy it up, trying to get out of their positions that they got socked with today, and it'll still probably follow some sort of trend line like this. Now, of course, nothing's a guarantee, but I do think that this pattern, is probably gonna play out here. You might even get a deeper cut tonight, and then maybe tomorrow morning you get a buy up. But I do think that we'll probably see some selling here, if not end of day tomorrow. But yeah, I think that, again, they're just raising capital for SpaceX, and playing that whole multi-billion-dollar game here, which you and I don't have the funds for. So all we're trying to do here is really just read the waves and kind of read the sentiment and the timing. There is a possibility here. I think it's pretty rare that both like bull and bear scenarios align. And in this situation this week, I do think that we're seeing something similar, where you could see, let's see here, if you get a bounce like this here, like your B wave, you could theoretically, like right around the 28,800 level, you could go short again, or you could just, you could try to get some, if the market opens up lower tomorrow, you can get some longs. Who knows? You might even see something like this tomorrow, like tonight, kind of thing, where it just tightens up a little bit and you get a lot of action. Again, futures still don't really look very good. The Dow's under 50,000 again, which is a good thing. But the Nasdaq has really suffered the most. So, anyways, I don't see any grounds for like a serious bounce right now. So the bullish scenario is really just limited to this kind of zone right here. Yeah, depending on if it dips even more. I think it's possible you might see a little bit more selling tonight, but I still think that this zone is kind of like the best that the bulls can hope for right now. Really what you want to see is a confirmation that this trend line will hold. So if you see, let's say, an extension down here, and then you see, another wave down like this, or if you see it, let me drag this up, or if you see something like this, really what you're looking for is a breach of this sort of trend line. Because if you have a breach, then that typically means the pattern is more of like an ABC up. And the reason for that is, it's really just, it's kind of like above and below moving average. If price is trading above the 200 moving or 200 daily moving average, or the 50 or the 21, that line is typically respected. So it's usually bullish above, bearish below, and that typically holds true for any of these major fib levels. If you're really looking for pivot points. I've been kind of live charting the last couple days, and I've noticed that I'm starting to see combinations of like impulsive waves and corrective waves, which is kind of weird. To me, it kind of seems that bulls want to buy the dip no matter what, but the amount of volume with the selling that's going on here is keeping a lid on anything. And despite speculations for the reasons, I still think that overall you're going to get. I think overall what's going to happen is you're going to get some sort of like seller exhaustion if it keeps up quickly like this. Like the bulls had one day, and that was back. So Friday we had a bit of reach. Oh yeah, yesterday after that big sell-off, the big kind of scary sell-off. This is like a sort of a panicky kind of. I think the Nasdaq was down maybe 3.5%, something like that, and then they kind of bought it up and we closed about 1% down or maybe a little lower. But we did have an ABC pattern up, and now that's kind of why I'm thinking that we might have either a little extension down or it's just not done yet. But the last little leg has always fooled me. So, anyways, like I still think that if you do get to this level, this like 27,780 level, I still wouldn't do anything with size right now because if this is the beginning of some sort of larger correction, you're going to get a bit of a move up, and that's probably like a short-term scalper trade, maybe like a 2 or 3 week sort of long trade before things like oil matter again, and we'll go over that in a second about what's going on here. So anyways, so bull bear scenarios are kind of tied together at the hip. Let me pull up the S&P, give you some levels here. And what's weird about this is like the S&P and Nasdaq, the Nasdaq chart looks almost exactly like SOX, which is not surprising, but it's still kind of funny. All right, let's do some drawings here. So this one here, so 7,200 is a reasonable level to buy the dip. If we get down here, this like 71.36, I do think that that's a really good level to buy the dip because this is still this purple line is still the 50 DMA, and you can kind of see my chart looks a little weird with the stair step, but it would be smooth if I didn't calculate it like per interval. So it's kind of there right now, but the Nasdaq is not. The Nasdaq is still a little inflated, so I think that's why we'll see a little more selling on the Nasdaq, and you'll see probably some more stabilization here in the S&P. Another reason I think you'll probably see some stabilization quick is you're starting to see some uptick in breadth, where you're starting to get some people that are buying the dip in other different sectors. But like energy right now is kind of getting squeezed. There's not a lot that are trading above the 20-day moving average. Consumer staples is kind of the beaten up child here. That's not what I mean. Sorry, you know what I'm saying. Financials are picking up a bit. Healthcare is always typically stable. Materials is kind of getting crushed here. Inflation is really, I think, taking a bite out of profit margins for producers. So we'll have to see what happens. I think the producer price, PPI is tomorrow. So if we got inflation ratings today where we got 0.2 versus 0.4 as of last month, I think that the PPI is probably going to come in a little bit less, so that's probably some sort of bullish catalyst. But I still think that we're not done yet. So it's kind of one of those things where you don't really know with any conviction whether it's a buy or sell. I think we've gotten far enough down where you're going to start to see some tricks, some stop hunts, things like that. But the volume here has been massive. So I think tomorrow will probably be the last kind of day for tricks and shenanigans before you get to the big main event here of the week with SpaceX and stuff. This is still the same thing here. I think you've got this sort of ending diagonal path to trade here. Anything within these trend lines, I still think it's going to follow ABCs. So you're seeing a little bit of bounce right now. The Dow just turned green, but I think Nasdaq's probably going to be the bigger loser out of the group here. So I would say if we do get a bounce here just for a bullish scenario for you guys. Kind of feels like it's probably going to go a little lower. If we do get a bounce here, it probably heads lower, if that makes sense. If we see a deeper cut, like if this little line here, I know it's real small, sorry, but if this consolidation pattern today ends up, like, let's say we see some more selling throughout the night, and then we get to this 7,200 level, that kind of thing. Nasdaq would be way down here. That's a pretty deep. I don't know if that's going to happen. Yeah, 2% overnight, probably not. Well, you never know. But you can kind of see this ABC pattern set up here. So overall, you might get a little bit lower lows, but I don't really think you're going to get much. Okay, so that's kind of the indexes. Let's switch to some of the other guys here. Oops. All right, let's do 10-year. So the 10-year, bond traders aren't fooled. They know that there's inflation out there. As long as oil stays elevated, it's currently at $92 a barrel. As long as it stays elevated, highly likely this is just the beginning of the next leg up here. I think you're going to start to see some panic in Congress and things like that over debt and debt servicing payments and things like that. Once you get to this, like, the first bull target that was hit, this 4.66. If you end up getting up to like 4.8, something like that, it's going to be not very cool. Even worse if it gets up to 5%. You'll see it all over the news. But the current strategy of the Treasury right now is to unload. Excuse me. Take a quick drink here. The current strategy of the Treasury is to refinance a lot of debt with shorter term bonds, because the long end of the curve, who wants to pay 5% on debt, as the most developed nation on the planet, or at least the most financially solvent, there's those quotes again, nation on the planet here, to actually have some sort of have a longer term payment, like for 30 years for those bonds. Those bonds would be worth a lot, I think. But I still think, right now you'll see some rates that are going to climb until you get some sort of break in the system. We are still kind of at that level. Rates at 4.5% for the 10-year yield are still pretty high. If you look back historically here, you can see, sorry, this chart is messy. If you look, sorry, here we go. If you look back historically, this has really just been a very large consolidation triangle. And we just had this breakout here, which is amazing to me. This to me looks like a really long sort of wave 4. If you kind of back it up here, this is what's important to take away here, is that this entire run up here has really just consolidated at the top here for a while, and we've had plenty of inflation over the last 3 years. Going back, we haven't really seen much. So we've kind of gravitated between, realistically, like 3.7% all the way, I would say probably to like 4.7%. So a full percentage point over the last 3 years. And it hasn't really made that much of a difference, but they really kind of twist that long end of the curve. And I just don't think it's going to get any better anytime soon here. I think we'll probably end up at about 5.3%, which would mean, the long end of the curve, you're looking at probably 8-9% interest, for 30 years. Nobody's gonna buy a home for that. Nobody's gonna buy new cars that they cost a fourth of a mortgage. So anyways, I guess the long story short about this thing here is that the 10-year yield is very, very important to watch. I think it is probably the most, or I would say the most important, yes, but not the only thing to watch. So yeah, I think that's probably good for now on the yield. All right, so gold has been the mystery chart. What the hell is going on with metals? So typically when yields go up, yes, that is not very good for metals. But that's because metals don't really pay a dividend. It's more of an inflation hedge. Now, there's been a lot of selling, but it's also now very oversold. The RSI is at 12.2, which is very, very oversold. I think that in general, this is sort of a risk-off event. And again, this may all just be to drum up some capital for SpaceX. Who knows? Or it could just be selling just in general. But I feel like silver has been kind of leading gold, and if you look at the silver chart, it's got a pretty evenly extended sort of sea leg. It might maybe make a lower low here, but these two metals are peas in a pod. So I'm going to continue buying gold the lower it goes, because gold is still resilient, and I don't think that we've seen the final wave 5 here. I think that yes, it is unfortunate. It kind of went below that. It went below my my final, or the bear target I had the other day here, that like 4,400 or whatever. But we also didn't know a couple different things. So again, I think it's way oversold. It could head down a little bit more here. If you're long gold, buy some puts. If you're feeling squeezed on it, risk management is definitely top of mind. I think it is at least relevant here to talk about the kind of gold I'm buying into. I'm buying into a high dividend, or like a high yield sort of ETF. It's called GLDI, and I'll just pull up the chart here for you. So this is it's a long-term play for what I'm doing here, and you don't have to follow. I highly recommend doing your own research, of course. So I mean, it is possible here. You're probably going to see a little bit lower, but if you look at the dividend, it's a monster dividend. Here, let me zoom in. So the value of the fund pays out monthly, and I'm not sure why I'm not getting. I don't know what's going on. Here we go. So if you look at this, this dividend is really, really nice. The last one here in May, or 4.427 like per share. That's awesome. If you look at it, the dividend yield, it's at 16.61%. So that's better than average. Across the board here, like even with indexes. Of course, over the course of a couple of years, but this is also still a good buying opportunity. So the one thing that I always like to stress is that you're never going to be able to time the bottoms, but what you can do is you can kind of feather in your position size. I wanted to have a little bit larger position because this dividend that they're showing is sizable. It's awesome. So with all the shares that I had here, they they pay a nice dividend. But the next one that's coming out for 5.56, it does change, by the way. It's kind of increases over time here, but that's just kind of how they run the fund. So I think it's mostly like a covered call ETF. So they make that the calls act as like a little bit of a hedge. So that's why you don't see this going from 180 all the way down to like 80, yeah, and losing more than half its value. After gold did take a pretty big tumble, but if you look at it relative to what happened with this fund, so it's down 20%. And if you look at gold peak to trough, gold, oh, it looks like it's getting bought up now too. Gold peak to trough from when we had that blow off top is down, 28%. So 8% delta there, including dividends. That it kind of acts as like a little bit of a hedge, but also you get that you get that nice dividend. So I guess to summarize the whole thing, yes, it might go down. If you're concerned about it, buy some puts. I'm in it more for the long haul. I think that metals in general, like silver here, is probably going to get a little bit more of a dip, but I think it's still gonna rocket higher. Just in general, like these are, if you look at the charts here, longer term, we did have one of those blow up tops And if you look at gold again, gold had something similar, but if you look at it, kind of looks like one of those bull flags, doesn't it? At least it does to me. So I've kind of outlined this for everybody. And again, even if it dips below, 4,000, I think it should at least have some sort of bounce first. Like it's been kind of hugging this trend line for a while, and kind of been floating in between these moving averages. But with it being below the 200 daily moving average, you're also starting to see a whole bunch of volume materialize. Yes, it is net sell, but you're also starting to see some buy delta here, and also lower. So you got a lot of sellers above, but if the buyers can get it above this 200 moving day average, they can break this trend line, and then we're off to the races here. But I think realistically, you might have a little bit more pain yet. You could see something like this, so don't be surprised. But just exercise good risk management. Don't jump into anything you're not willing to sit on for a while, especially with trading commodities. Commodities can be very weird to trade. It's kind of a weird way to say it. I don't know. I don't know how else to say it. All I know is that like gold and stuff. Gold's not going to go down for forever. Inflation always drives people towards a hedge. So I think the only reason why people are, like it's different this time with bonds not being very attractive to park your money when there's turbulence in the equities market. So for right now, I think metals are kind of being cast aside because it's not the hot thing right now. It was all semiconductors. So now that people are kind of rotating out of semiconductors, who knows? Maybe the next sector, or the next the next thing to get pumped up will be anything space, or anything space related or something. They're from the euphoria from the SpaceX IPO. But I would also say that metals, the people have loved gold. People have loved metals since the dawn of time. Um, that interest is not going to go away. It's not like Bitcoin where it's a new thing and your grandpa doesn't understand it. Um, that's really just a matter of time, but it still takes years and years and years for people to adopt something and stick with it. But gold has always been there. Same thing with silver, platinum, palladium, antimony. All these different critical, these critical items that you can at least hold in your hand. So I'm a net buyer of gold for a long-term trading horizon. So, all right, that's enough about gold and silver. But yes, so just protect yourself. Let's look at oil. So oil, to me, this one hit the bear target pretty much on the nose, which was nice. But you also have a very, very large bull flag. Make no mistake, this is a bull flag. And, President Trump's talking about bombing Iran to the Stone Age again. And, you see all this buy volume down here. People are expecting it. So you might check it out again. You might taco on it, but you still have a lot of net buying between the prices of 97 and 87. So you've got a 10-point price range there, where usually you'll see a doubling of that. So you could go up to 107. So you can go all the way up to the top of the triangle, and that's probably a realistic like take profit sort of zone. What I think you'll see here is really just a continuation. You'll probably see like a little bit of an overshoot, and then a retest of the breakout, and then you'll see a continuation higher. I think that this is still, like, this chart pattern here is kind of a layup. It's kind of an easy one. It just takes time to materialize. Like I said, commodities sometimes trade weird. They have contract rolls and all sorts of fun stuff. But I've got a very large position in long oil right now, and I'm not concerned in the least. Same thing with TMB. Those are two things that I can sleep well at night, knowing that those positions are larger, just because it's so much harder to put the genie back in the bottle after it's been let out. So like the Iran war, Strait of Hormuz, miscalculations left and right. Yeah, I don't think it's going away anytime soon. Even if they make a deal, there's still going to be the supply is still going to take a long time to catch up. All right, so let's look at natural gas. Natural gas has been kind of weird, but it's also still making a flag. You can kind of see it here. But I think I'm going to exit oil if we do get this C leg move up here, I'm going to exit Boyle. I don't have a very large position, but I think it's just not a real fast mover these days. It's still, gas just trades erratically, and I feel like some people get chopped up with it, but people still like to cover it. Bitcoin has had its day here. It's consolidating, and I think you could probably see some sort of channel, up here, but I don't know what's going to happen here quite yet. I think we might see maybe something like this to make a lower low, and then we have like a key fib level hit, and then maybe we get some sort of ABC up, and then we get one last little capitulation leg down. But this is the same sort of thing with Bitcoin as I was saying with gold, where if you zoom out, yeah, got jokes on my charts now. If you zoom out, this is actually a pretty predictable pattern as far as I'm concerned. It's called a double zigzag, and I guess it doesn't really matter what it's called. What is important though is you've got a pretty predictable ABC sort of pattern, where you can see where like typical extension levels are reliable. So now that we've got this lower low here, and this just ton of selling here, it's still really just been kicking all the bulls while they're trying to buy every dip, and it's just getting what's going on here, and it's just getting absolutely punished. So it's down about 53%. So if it does go down even further to about this 66%, so it's kind of funny how that works, right? That's a pretty common Fibonacci level. So if not the most common Fibonacci level. So if you do get some sort of selling here, it's that 0.786, and you got a lot of volume down here. And this is before it ever really took off. But what's funny to me is that you could have, I don't know, like if you just buy and hold, it doesn't really work sometimes. So, but I am a buyer in this area for sure. And what I'm going to do is I'm going to buy the same fund as gold, which is like this BTCI. It's just a high income Bitcoin fund. You can kind of see it hasn't been around for very long. But it's still got $1 billion in capital there. But it was introduced recently, and because of that, the chart just kind of looks like garbage. But you're also still getting some sort of volume here, and it still pays a nice dividend. Once again, I'm still having a clicking issue. There we go. But relative to the price, I think that picking this up at a lower level, if I could pick some up for like 20 or 15, and then ride that all the way back up to 60, when it eventually corrects, paying all those dividends the entire way, that's going to be a pretty lucrative longer term sort of trade. All right, so enough about long-term plans here. People want to make money today, right? All right, so like I said, the SOX chart looks almost exactly like Nasdaq. So nothing else I can say here other than just remember what the Nasdaq talk was about. Nvidia, it's falling. Excuse me. It's falling about as expected here. Something you'll probably have one more last hurrah here to hit this like 250 level, where then it could be half of the world's GDP instead of just a quarter. Laughing at my own jokes again. Don't do that. All right, so I think maybe like 196. If it heads a little bit lower than 196, then I think it's probably going to be a deeper short. I think you might actually see something like this where you get a pretty strong extension of the C leg. But we'll have to see what Nasdaq actually does. All right. Last but not least, Tesla. Tesla. I have some thoughts about Tesla. Well, one, I think it's a great company. They got tons of diverse offerings and all sorts of stuff. But the real question is really like, where's it going to stop? I think you might get. I only did 1 unit of TSLL today because it hit the bear target here. The next level down is likely this 0.886 level. If you do get this extension lower, let's say you kind of redraw these trend line here, or redraw these trend lines. If you do get a little bit lower, I will add in some size down here at this bear target. I think that we're going to get some sort of like euphoric euphoric bounce, just because of Elon, everything the guy touches turns to gold. So so anyways, you might get a little bit lower below here. Again, use puts, buy the inverse ETF if you're quaking in your boots a little bit. But anyways, so that's kind of the whole kit and caboodle here. I don't know. I haven't said that probably in 20 years. I know what I'm saying. Probably because I'm talking to myself on camera. That's probably it. Anyways, guys, so that's it. Stay solvent. Sellers are there, trying to buy the dip. It's been a bad couple days. There's been a lot of fake outs and a lot of heavy sell pressure. So highly recommended to focus on the risk management. All right, guys. Well, thanks for listening, and we'll see you next week.